Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about what a public company executive's stock trades convey to investors. And let's start with the idea of sell-side equity research. A rating on a stock conveys a message to investors. And there's really two key considerations to that rating. It's, can you be consistent over a long investment horizon? It has nothing to do with price targets. And ideally, your best bet is to never change your rating over the long period of time that you cover a given stock. So let's take this and look at public executive stock trading. And the idea here is that when an executive trades his or her stock, it sends a rating on the underlying company. If you're buying stock, typically investors believe the stock is only going up because you only buy for that reason. Now, if you're selling stock, it could be a myriad of reasons why you're selling the stock. But there's 4 key downside risks you need to keep in mind when you're a public executive. And this is the idea that you could end up front-running your investors. You could end up making your investors a bag holder if the stock goes down from where you sold. It could destroy your credibility. And then finally, it suggests that you lack conviction in the long-term growth prospects of your stock and underlying business. And so what is the best course of action? Well, there's 2 ideas here. One is to have a 10b5-1 plan in place where if you do need to sell, you're selling at regular intervals in smaller chunks that really don't convey any message to an investor. Or ideally, you don't sell until you leave the company because you don't want to put yourself in a position where you completely destroy your credibility and you're trying to tell investors to be bullish on your stock when you sold at the top. So a current example is Transocean. The CFO sold 3.4 million shares when the stock was at $8.50 and the stock went to $4.50. Disastrous for credibility. Conversely, a member of the board recently purchased 1 million shares at $4.89, which sent a very bullish view on the stock and that it was undervalued. And so public company executives need to remember, trading your underlying stock is the most powerful signal you can send to investors. You need to do it with care and caution because you could destroy credibility and your stock price. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.